Chris Breike from Stockspot, the robo-advice business in Australia, and I'm very fortunate to be joined here today with three of the prominent CEOs from Mirae Asset businesses around the world. We have Ryan from Global X in the US, we have Swaroop, the CEO of the Mirae Asset business in India, and Rohit, the CEO of the Canadian Global X business. Welcome, gentlemen. If I could start by asking you to talk a little bit about your local businesses and where they fit into the Mirae Asset family.
Of course. Well, first of all, happy to be here. Exciting time for all of us. My name is Ryan O'Connor, as Chris said. I'm the CEO of the Global X US business. We are a $50 billion manager that focuses on thematic and income-oriented investing. But honestly, I would say that our common thread that pulls through everything we do is one of innovation. In terms of the broader US market, many things that I could say in terms of the US ETF market. The one that I would say, though, is it's quite big. So it's about an $8.8 trillion market, which makes us the largest ETF market in the globally. But that also makes it quite a competitive one. So excited to talk about some of those trends and get into some of our global synergies.
Hi, my name is Swaroop Mohanty. I represent the Mirae Asset business in India. Typically, the Indian business is still active mutual funds with the growth of passives, and typically the ETF business is just about beginning. We will see that growing because of the demographic change on the country and the risk-taking ability changing, and they're really looking forward to embracing some of these exciting products as we speak. And at India, we're looking at building that business strongly, but it's very interesting to note that Mirae Asset is the only global asset manager which is organic in nature. We're number 9 in the country, so for a global asset management company, that's a fair journey in India. We've been there for 16 years, but that's the first part of the business setup.
Wonderful. Pleasure to be here with you gentlemen. My name is Rohit Mehta. I'm the President and CEO of Global X Canada, and actually the newest member to the Global X family as we went through a rebrand on May 1st of this year. When we take a look at our business in the Canadian marketplace, we're the 4th largest ETF provider in Canada. We were founded in 2005, and we're actually the first acquisition of Mirae Asset in the ETF business outside of Korea, and that was back in 2011. When we look at the broader Canadian landscape, Canada actually has the distinct honor of being the first ETF offered in the world. Came from Canada in 1990. And since then, our industry has continued to grow in the Canadian marketplace, where today we're about $440 billion in total assets in the industry. And we're continuing to see strong growth in that and across over 1,200 ETFs. So Ryan, one of the things that you mentioned was around innovation. The Canadian landscape and Global X Canada, innovation has been at our core, both from the industry and from us in the Canadian marketplace. So I think we'll talk more about that as well, Chris.
Great, well, and my name, as I mentioned before, is Chris Breike, so I run Stockspot. It's an Australian robo-advice business and a recent joined member to the Mirae family, so it's a business I started 10 years ago. It's the largest robo-advisor that provides direct-to-consumer wealth management services, and like a lot of the other Mirae family businesses, we're very passionate about ETFs. We exclusively use ETFs in our portfolios, including for the last 10 years some Global X ETFs already. So we're very familiar with the ETF space, although we have a slightly different bent on it because we're dealing directly with consumers, building and managing portfolios and providing advice services as well. So in today's discussion, we're going to be covering a range of ETF related topics. I believe we're going to be talking about innovation in ETFs and where the trends are heading. We're going to be looking at some of the collaborations between global entities and then touching on artificial intelligence, which is a hot topic at the moment, and how it's getting incorporated into various investment strategies. Maybe if I could start on the collaborations, and Rohit, you mentioned that you've gone through a big rebrand recently, I think only a month or so ago. Maybe you could talk a little bit about how that came about, why it happened, how it went, and then also what the feedback's been from Canadians since you rebranded.
Absolutely. I mean, to sum it up in one word, it has been amazing. We started this journey really earlier last year. When I went across the country, what I noticed when I spoke with clients, partners, was that they understood our local expertise, but they didn't understand the depth and strength that we have as a global organization. And it's important to be able to showcase that global strength, particularly in today's environment, where we're finding that partners, investors are looking to deal with fewer companies for a whole host of reasons, but have deeper relationships. And one of the bars for entry on that is having that global strength. So by the rebranding to Global X Canada on May 1st of this year, we're able to showcase the global strength. I mean, just in our neighbor to the south of Canada, being the United States, Global X US, as Ryan was mentioning, is $50 billion US. We're able to now couple that with Canada's $33 billion in Canadian dollar terms in ETF assets. And so showcasing really in Canadian terms $100 billion of assets in the North American ETF landscape. And so what we saw as we went through leading to the progression of the rebrand, we announced it internally in January so that we could, as one of our pillars is around performance culture, so that everyone could contribute to it. And then we announced it to the marketplace in March, and then we officially rebranded in May, on May 1st. And in the month of May, in addition to that, we launched 17 new ETFs, which is actually a record for the most ETFs launched in Canada by an ETF provider in 1 month. So again, being able to just bring that global strength, local expertise together, and the Global X rebrand has allowed us to do that and increase collaboration with all of our offices and partners around the world. So Ryan's team and our team, Australia team, all of us being able to work together on a common vision, common goal, and in greater collaboration.
Great. Well, yeah, obviously, like the consistent global brand helps the different businesses work more closely and feel more like a family. Ryan, from your perspective, like where are you seeing opportunities to collaborate, and maybe you can talk to some of the areas where you have collaborated.
Sure. Yeah, and Rohit mentioned that his business was the most recent to join the Global X family. I am the most recent to join the Mirae Asset and Global X family as the most recently hired
Congratulations.
CEO. Thank you very much. So the first way that I would answer that question is so far tons of collaboration, so thank you all to my colleagues for helping me get up to speed in such a short period of time, but hopefully there will be more into the future. I would expect that. But I guess the way that I would answer that question specifically is around one thing that I think really helps us to differentiate and compete in our local market, which is around constantly thinking through the most impactful new product ideas. And the way that we essentially take a very large funnel of product ideas and bring it down to some of the most innovative, well thought out, impactful products for our clients ultimately. So that can manifest itself in many different ways, monthly global calls, ad hoc interactions, us getting to know each other better. But I would say, to be very, very specific, one thing that I have seen, kind of being a newer CEO in the seat here, is around how early Mirae in general, and our local ETF businesses as well, recognize the transformative nature of the AI trend. Specifically, our product in the 40X structure in the US, AIQ, which is now over a $2 billion product, single largest AI-focused product in the US, is something that was hugely supported by kind of collaboration in the broader Mirae ecosystem. So that's just one of many, hopefully, into the future.
And even just to add to that, with those 17 ETFs that I was mentioning that we launched, one of those was actually wrapping AIQ into AI Go in the Canadian marketplace. When we talk about that collaboration and global synergies, it's a great example.
And I think as well as, AI we're going to talk about a bit later.
Sure.
The other area where we've seen a lot of collaboration already in Australia is even just, talking about different marketing strategies. So, really sharing insights with both the local teams and the global teams around best practice in different areas. We're very much a direct-to-consumer business only. We don't have a wholesale or institutional bent to our business. And so there's a lot of areas like content that we've been supporting other Mirae Asset businesses, and then areas like events where we've been learning about best practice, and that's certainly been helping us for the last year. Swaroop, in terms of products, are you taking inspiration from the rest of the world, or is the rest of the world taking now inspiration from India?
No, actually, we are in a very advantageous situation as we see the birth of the passive or the ETF market in India. We get great insights from large markets, and we can leapfrog to kind of take in the best practices from across the world. We don't have to go through the big vagaries that this market had to go through or Canda had to go through. We can pick and choose right now. So we are at this great advantage. And when we started in India, typically our entire business focus was based on what we learned from the thematics from Global X. And that's how we kind of based our entire positioning. The launch of the FANG Plus is something which we learned from them, and it was an eye-opener for us because India was typically, and still typically, is this classic core market cap products. And that was a product which is completely deviating from the risk profile of the average Indian. And that's when we realized that the demography of the country is playing out. The young are looking at differentiated products. They're able to up their risk profile and catch these products. And that's what formed the basis of what we are thinking of. And then we collaborated and we picked two of their great products on the EV and AI side, and we run a fund of funds with them, which is getting money every day as we speak. And going forward, most of the strategies that we learned from both these markets, we are imbibing with our own products, and we just launched first India EV product, learning from them. A lot of themes which we've based out of our ETF products are bred from our house. We run it from the local index provider. You must also know that we're running a small index business now with the support of both of them.
Not small for long.
Not small. We started in 2020, but the inputs that we get from these two markets can just leapfrog us in the next 5 years to a different platform is our firm belief. But as you rightly said, collaborating and working with the four here will define a lot of what we do in the future.
That actually tied into one of our 17 launches as well, was on the Mirae Index, on TTTX. And we actually have also filed to wrap one of Swaroop's ETFs in India. So as we work on bringing, particularly around the India opportunity, that context to Canadians, we see a huge demand for it. But actually able to tap into the local India market is very challenging for countries that are outside of India. And so by being able to collaborate, it's going to shrink our time to market from about 9 months to 3.5 months or so.
It has a big impact to get out there early before trends are already embedded and consumers miss out. I know in Australia, Global X launched an Indian ETF a few years ago, and it's been very popular, and particularly with the takeoff of the Indian market over the last couple of years, there's been a lot of assets coming into this ETF, and they were certainly ahead of the game. They've really been able to innovate well.
In fact, with Global X US, we run the backend for an active India story there. So it's great to be sitting in India and talk with both of them as if we are the same office. It's fantastic.
And you mentioned demographics as a driver for the interest in various ETFs. I'd love to dive into that, because I can certainly talk about our experience in Australia. How is the demographics in India driving where there's interest in different products?
I mean, it's fascinating. It takes us time to realize that 60% of world population under 30 is in India. Right? Wow. That's staggering. When you put this data 10 years later, you'll have Indians everywhere, by sheer presence of the number of people that we have. But here's the thing, the young in India are very different from the previous two generations. The gap between my dad, me, and my son is very evident. They have knowledge and they are economically better. India used to be a poor country 10 years ago at 2,500 per capita. Now, with the denominator being so large, it's not exactly a poor country now. And so they are economically better, and hence their risk-taking ability is far superior than what I used to have. So the products they will embrace and it's already playing out, is completely different. So from here on, what we believe is India will be a very differentiated product to what it was till now. So the 20-25 years of financial investing in India may not have any correlation with the next 25 years, is where we are sitting, and that's a staggering thought. And that's where if we can get such ideas from there, I feel the Indians can get onto those ideas far quicker than, say, my generation did.
And how are you, financial literacy is always a big topic in Australia. How is Mirae Asset helping to improve the literacy of people and realising how important investing is?
Actually, very interestingly, two things happened. One, at a regulatory level, they pushed 2 basis points of our AUM into investor education. And that kind of changed everything. It was by regulation we started, though we were doing things, but when you got 2 basis points out of our AUM set aside for only investor education, things got very serious. And that was the turning point, if you ask me. But working in Mirae Asset for 13 years and the kind of knowledge academy that we inherited from Mirae Asset sold also kind of set the base of having a knowledge academy in India. We have investor programs practically every day. In a year, we would do at least 700-800 of them, at least, with the entire team on the road practically. Whether you want to hear our story or not, but we will tell our stories is a reality.
So it sounds like it's a rolling snowball of wealth growing in the country, and that's really contributing. What about in Canada, Rohit? You got the millennials and the young people, and the ways that they're investing, particularly post-COVID, versus the older baby boomers. Are you seeing sort of differences in their approaches for ETFs?
Absolutely, you're seeing differences. And when we take a look at, Swaroop was chatting about the the young population in India. You contrast that in Canada and in many parts of the world. In Canada, by the end of this decade, close to 25% of the population will be over 65. And they're going to be aging, so in those retirement years, but increasingly without what we had as defined benefit pension plans historically. And so what we're seeing is that these retirees, so the baby boomers that are now moving into retirement, that big cohort, are looking for income. And they're needing to get income from equities where they historically may not have needed income from. And we've come into a higher rate environment, but for a number of years we're in a very low rate environment. So that actually helped with the adoption of themes around things like covered calls. And so, Global X Canda looks to be a leader in that. We're almost at $2 billion in our covered call suite. And then to contrast that with the younger generation, the millennials and the Gen Zs, what we're seeing is they're driving a lot more through the DIY space, but they're actually looking to grow. I mean, they really are looking for more immediate gratification, and that's tapping into lightly levered type strategies, more equities, more thematics. Though we're seeing thematics across the spectrum, we're definitely seeing them pick up on really key themes, particularly around the technology, AI, and even some of the move towards newer commodities for that new fuels of the future, if you will. So around batteries, copper, etc. So we're seeing both sides of that spectrum in terms of barbelling, where we're seeing the needs from a demographic standpoint.
Interesting, in Australia we sort of see the same dichotomy, like we're seeing our older investor clients really focusing on income, and in Australia, because the dividend yield of our market's always been quite high, dividends have been attractive for retirees. At the end of last year, we actually launched an income-focused portfolio really to tap into that retiree market, because the feedback we were getting was that they wanted a bigger proportion of their total return coming from income rather than capital growth. So we added some higher yield ETFs and corporate bonds to really juice up the yield of the portfolios, trying to keep the risk intact. And then on the other side, like you say, the younger generation in Australia really feel like they've missed out on the property boom and the leverage you get from property. And so, certainly there's interest in some of these, leveraged ETFs. I see more and more coming out in Australia, and some of the higher octane opportunities, whether it's through AI. We also launched an inflation portfolio recently where, we're really focusing on inflation protected assets, because people are seeing the purchasing power they're seeing in Australia reduced through inflation. So we are seeing differences, and unfortunately the younger generation in Australia are seeing a lot of their wealth getting eaten up in mortgage repayments and rents and living expenses, and so the big wealth in Australia is still sitting with the baby boomers, although eventually that will get passed down. What about in the US?
Well, the thing that I think is so interesting about that tidbit that you give there and all the other answers that my colleagues have given here is it feels like our answer to the shifting demographic question is that there are use cases for ETFs in every demographic bucket to varying degrees, I think. And to give the US perspective, there's a Charles Schwab study that usually they do it every year, going out and asking folks, what is your investment vehicle of choice, right? And 80%, the last time they did this study was in 2023, 80% of folks that they surveyed said that ETFs were their vehicle of choice, right? I think some of the interesting things that you come across is when you start to look at it by cohort, right? That number goes to 90% when we start talking about millennials, and down to 65% when we start talking about boomers. So, 65% though, the point is still a pretty darn big number. So it's a long-winded way to say, from a demographic perspective, within $8.8, almost $9 trillion market in the US, almost everyone's looking at utilizing ETFs. The nuance becomes how they're using them and really just leveraging the power of the ETF wrapper.
I mean, that penetration I'd love to see in Australia, because our stock exchange, the ASX, recently published a similar study showing that in the last couple of years, the interest in ETFs as being the preferred investment vehicles only increased from 15 to 20%. Oh, wow. So we're a long way behind the rest of the world, but it was always my thesis in setting up Stockspot is we should be following the US and Canada, which were always a few years ahead of us, because they are such wonderful products. And in Australia, there used to be some conflicts with advisors that prevented the distribution, but now a lot of those have been addressed by the government, and we're seeing a lot more, uptake in these products.
What we're seeing in the Canadian marketplace, as you think about that, some of those ratios, the amount of money that was in mutual funds versus ETFs has gone from 10 to 1, so $10 in a mutual fund per dollar in ETF, to now 5 to 1 in the Canadian context. So we are seeing that drive, and so mutual funds still have a foothold, but their increase has been much slower versus the rise of ETF assets in the Canadian business. And I think we're going to continue to see that.
And I understand in India it's very different, right?
Just to take on from what you said, because we follow the Australian market very closely. It's staggering to see how the Australian advisors or distributors switched from high-cost products to low-cost products practically overnight. And that's something when we go and talk to a lot of our advisors, there was pushback, say a year back. But then you just lay out the basic thought that there's only one rule in our business: what's right for the customer is right for us. And we give your example, and we've done enough on your part to showcase how distributor models can change worldwide. And Australia is a great example. We probably trail you 3-4 years, but we see that trend coming to India very soon.
It took definitely government input to actually change the game in Australia, and Stockspot was lobbying very hard for many years, trying to encourage government to ban commissions on managed products.
But I must tell you, I think our regulator is sitting almost there. So we're kind of saying that, see, it's happened in Australia. If it happens, what will you do? So you better be prepared today, and many are buying it now.
Yeah, it's certainly a tailwind for ETFs. The more aligned advisors are for their clients, it's clear based on the evidence and all of the research that these are wonderful products. Tax efficient, transparent, low cost. They're just a great vehicle for long-term wealth accumulation. Maybe we can switch on to the AI topic, which I know has been broached already. So, we see in Australia a lot of interest in the topic generally, certainly from an investment perspective, and I know Mirae Asset is now looking even at index construction as a use case for AI. Maybe if I could start with you, Ryan, where are you seeing the interest in AI products and AI within your business?
Yeah, no, that's a great question. And I think the first way that I think about that and I answer that question is around honestly everything that we do as a business to construct and ultimately end up running our business and our funds. So thinking about things that were once highly inefficient and, dare I say, rote to a certain extent, like fact cards, right, and things of that nature, to leveraging, which is probably less rote but important, data from our clients that our sales teams are utilizing to extract trends out of our CRM. So that's kind of the first way that I would answer it, is around things that we're doing within the business and are becoming much more efficient in utilizing on a go forward. The second thing that I would say is around products specifically. The way that we are out talking about our business, the innovation that we represent, the AI products that we have, AIQ being very specific, is one that we've had a lot of conversations around, a lot of interest in, particularly around some of our marketing to the direct consumer kind of business, which is a big channel for us. And I guess that's a very long-winded way of saying this is a trend that we don't think is going away, and where we can embed it within our products, it's something that we've had a lot of interest around.
Mm-hmm. And yeah, I think Global X and Mirae Asset has always been so strong in thematics. This is clearly the not only big thematic of the year, but it's probably decade and even generationally. So I think the more that consumers can access it in a really efficient way, what a wonderful thing they can do. Where 20 years ago, the original internet and other technology innovations used to be very expensive to access and not transparent and weren't always great as an investment class. Swaroop, what about in your business? Where's AI taking hold?
No, I think it's the beginning. I think we as you know, we launched an indexing business in 2022. Now we're supporting that with an AI team. We have a development team developing in India, and I think thanks to the supply of good data engineers and AI developers at a younger side, we feel in the next 4 or 5 years we can build a good, strong AI thinking team in India, which can either produce products for us or maybe support with the support of our two large guys, we can, and we have to take input from you because, robo is something which is yet to start in India. So we're working on a great idea with Rohit as we speak. Maybe Rohit can talk about the product, which is his product, but on the dividend side is something which we are beginning, and that's a beginning. But in India, if we can do it, it'll be great. Maybe to launch the first AI active product in India, if we can, that's an aspiration. With the team in place, that's something which we want to do first, and then by that time, by learning from both these markets, if we can develop an ETF in India, again, want to be the first, because we are the first EV one out in India right now as we speak. So if we can do the first AI, it'll be great for us.
Yeah, it's very exciting. It's almost like a whole new category of
Yes,
ETFs,
yes,
you know, active AI-based.
Yeah. And that's when the
index
disruption starts, right? And people have to be more open to. The great part of Mirae Asset India, let me tell you, is most of the ideas that we develop on the ETF side are back-ended by our active team. You know, and there is absolutely no conflict between our active team and our passive team. We sometimes run strategies parallelly, and the active team will say, let's see who beats. And that's so great to see as somebody who's neutral, asset manufacturer or a product manufacturer. And we go out as one entity. We present on the stage, both sides present together, which normally does not happen. And in India, it's sacrilege, but taking that step forward. But good to see that both teams work in complete synergy with each other.
And the beauty is the data tells a story eventually.
Yes,
so
yes,
there's
finally,
no pretending in the end.
Correct.
Well, yeah, I guess you point to another, you know, a good point, which is another collaboration opportunity is really with like skills between businesses. You know, I think, you know, certainly there's a skill shortage in Australia for great engineers, and it was something we were discussing even that, you know, potentially it would be great to get some of the fantastic engineers from India to come and, you know, learn from what we're doing, but also help us, you know, support our business, and equally then we can, you know, help to send some skills over to develop robo-advice.
Actually, it's interesting how the talent is moving from data engineering to AI slowly but surely. My son's developing an AI developer. I quoted him as a software engineer. He said, Dad, if you can write AI developer, it'll be better. It's like that.
If he's looking for an internship in Australia, please let me know. Rohit, what about in Canada? Where's AI embedded?
Yeah, it's embedded everywhere. I mean, Jeffrey Hinton, you know, sort of framed as the godfather of AI out of Toronto. And so AI, for us, you know, as you know, Ryan was mentioning, is, you know, just throughout the business. So we have three key pillars at Global X Canada. One is around performance culture. Second is around product innovation, which is obviously near and dear globally within the Mirae family. And the third one is around the power of data. And that is, first step is around data enhanced decision making. And then now overlaying models on it that from a learning standpoint. So it's going to be us to be better partners, us to be offering better client experiences, and then ultimately better products. And so we're seeing that in terms of a few things that we've done and then a few things that we're going to be doing when we take a look at the product side. So we've had providing access to investors to semiconductors. So really the chips that are needed for AI through our semiconductor ETF. Chips. We then, as I was mentioning, wrapped AIQ in the US with AI Go in Canada, another way to provide to a large diversified global portfolio on the AI side. And then the third one that we just launched is around a blue chip top 10 innovation index ETF built on a Mirae index on TTTX. And then, as Swaroop was saying, not to give too much away, but we are working on some other aspects in terms of AI exposure through the infrastructure side, and then also AI on the dividend side. So there's some things that are still in the lab, and looking forward to bringing those to market in the coming months.
Okay, I love the way that you frame it in terms of, you know, it permeates, it hits everything, right? I totally agree. And like, just as we think about and talk about other product opportunities and ideas that come up, I mean, the other two that we talk about internally are, so of course you've got the semis and some of the direct kind of hardware associated with AI processing. But other things that we're talking a lot about in our market is, you know, one, the infrastructure associated with just housing all of that hardware. So things like data centers, right? So DTCR is an ETF that we have in a 40X structure in the US. And then the second piece of it is you know, kind of what we call the interface, if you will. So the way that we interact with AI. And from that perspective, we're talking about cloud-based companies, we're talking about software as a service, things of that nature. So we also have an ETF there. So, you know, I like the way that you frame it in terms of it permeating everything and touching everything you do. I think it is a persistent theme that touches multiple markets.
And it actually ties into, even when you look at the ETFs and you look at the look-through, it's not all technology companies.
Yeah,
exactly. Right? It's technology, but it's able to be embedded and enhance all aspects of, you know, business and arguably life in many ways as going forward.
I mean, I would say there's no business which does not now incubate AI. So it's pretty diversified when you look at the final output of the portfolio. It'll be.
If you look at Q1 of 2024 in the S&P 500, on the earnings call, 200 of the companies in the S&P 500 mentioned AI in their earnings call.
Wow.
So everybody's talking about it. Everybody's figuring out how to use it.
Well, yeah, it sounds like, I mean, our businesses are very interesting at the moment because we're both investing and creating products that are investing into businesses directly and then, as you say, indirectly involved in this space. We're thinking about index construction and how to build portfolios using AI. And then as Ryan mentioned, like we're trying to work out how we can make our own businesses more efficient and productive using AI. You know, that's probably the area at the moment we're most focused on, because we're not creating products, is working out how we can help our advisors who speak to clients be more productive in their work. Well, that was a very thought-provoking discussion about ETFs and how the different Mirae Asset businesses are working together to integrate different technologies and ideas. Thanks, gentlemen, for sitting down with me. I've learned a lot about your businesses, and I'm very excited to see the future of how Mirae Asset businesses will work together to face and solve challenges in the future.